Welcome, car enthusiasts. Today we're diving into a serious phenomenon in the used car market. Prices of used cars are rising at an alarming rate. The auto industry is facing yet another interesting conundrum. Car demand has significantly dropped, leaving automakers with an abundance of stock that they're struggling to sell. We all expected the situation to lead to a sharp decline in car prices, but the car market is becoming impossible to predict these days. Prices did soften for a while, but now it seems they're reversing, and it's taking everybody by surprise. Join us as we take a look at the used car market and how it has just flipped. The current state of the car market can only be described as the craziest and weirdest it has ever been. When you walk into auctions these days, something unusual is becoming the norm. Cars are simply not selling. In fact, we're now seeing an unprecedented number of no sales, breaking records left and right. This creates a peculiar situation where a large number of vehicles pile up at auction sites. As if that weren't enough, there is an additional wave of repos flooding the market every single week. Repossessions happen when an auto lender takes back possession of a vehicle when the borrower falls behind on loan repayments. With the ongoing economic challenges and financial strains, repossessions can sometimes happen without prior warning or court permission. Many individuals are finding it difficult to keep up with their car payments, leading to an influx of repossessions hitting the market. Adding to the complexity of the situation is the lower value indicated by Kelley Blue Book. As the tax season comes to a close, the values provided by this trusted resource start to experience a decline. This downward trend has a direct impact on market dynamics. Potential buyers, aware of these decreasing values, become more cautious and hesitant, resulting in reduced offers at auctions. Naturally, this downward pressure on prices is not conducive to successful sales and further contributes to the overall decline in the car market. The situation is the same with car dealers. They're grappling with an increasingly challenging situation where cars are not selling, and the pressing question of how to generate more revenue looms over them. The flooring lines, which are lines of credit used by dealerships to finance their inventory, are exerting pressure on them to sell cars swiftly and clear their mounting debts, compounding the problem. Banks are also witnessing an extraordinarily low number of new car loan applications. This reluctance is caused by various factors like economic uncertainties, inflation, and a rise in interest rates. Given these circumstances, one might reasonably expect that the combination of cars not selling at auction, dealerships with lots brimming with unsold inventory, and a lack of demand for car loans would result in a downward trend in used car prices. However, the reality is quite the opposite. As cars languish at auctions with little or no sales, dealerships remain reluctant to reduce prices, and in some cases, they're even raising them. Cars sit idle and unsold while dealerships still bear ongoing expenses such as financing costs, advertising fees, maintenance, and cleaning in an effort to mitigate these monthly recurring costs. Dealerships are compelled to keep prices stable or even increase them over time, hoping for a breakthrough sale that would offset their mounting expenses. The current major issue plaguing the used vehicle market revolves around a shortage of more affordable models. Car dealerships find themselves with an abundance of relatively expensive used cars that are fully optional. However, the majority of used car shoppers are not actively seeking high-priced, top-tier models. This discrepancy between available inventory and consumer demand means that if you're looking to trade in your used car, you may have a better chance of securing a great deal at this time. Dealerships are burdened with an overstock of pricier vehicles and may be more willing to negotiate on trade-in prices. This could potentially work to your advantage. On the flip side, if you're in the market for a more affordable used car, you might be met with limited options on most used car lots. This mismatch between supply and demand has resulted in a scarcity of budget-friendly models. Now, there was actually a slight reduction in used car prices, according to the Manheim Used Vehicle Value Index at the wholesale auction. Prices for used cars experienced a decline in May. The index revealed a 2.7% decrease in prices from April, marking the second consecutive month-to-month drop. Also, compared to May of the previous year, wholesale prices were down by 7.6%, indicating a steady year-to-year decrease. Although the overall trajectory may not be entirely linear, with occasional minor increases in certain months, the overall trend is clearly headed downward. When wholesale used prices go down, it generally follows that retail used car prices will also decline. However, there is usually a lag of around 6 to 8 weeks before the retail market reflects these changes. Therefore, it's expected that we might see another drop in retail used car prices in the upcoming weeks. This downward adjustment in retail prices will align with the declining wholesale prices, but don't get your hopes up too much. While we expect further decreases in retail used car prices, it is unlikely that we'll see a return to pre-pandemic price levels in the automotive industry in general in the foreseeable future. The market is still in a state of flux and undergoing adjustments as it adapts to changing conditions. It'll take time for the market to stabilize at a new equilibrium, and until then, prices are expected to reflect the ongoing market dynamics. According to a recent report from UBS, global car production is expected to surpass sales by approximately 6% this year, resulting in an excess of around 5 million vehicles. This surplus inventory poses a challenge for automakers, as they will likely need to implement price cuts to facilitate the sale of these excess cars. However, the timing of these price reductions may be delayed until the latter half of 2023. The bullish production schedule set by automakers has raised concerns about the risk of overproduction and the subsequent pricing pressure associated with an oversupply of vehicles. Automakers will face the challenge of ensuring these cars find buyers, which may require competitive pricing strategies to attract customers. While the exact timeline of the price cut remains uncertain, the prevailing expectation is that the latter half of 2023 will witness intensified competition among automakers, leading to price reductions in an attempt to sell off the excess inventory. The potential price war is anticipated to impact both EVs and traditional combustion engine vehicles. Automakers are aware of the need to manage the situation effectively, as excessive inventory can strain their finances and hinder future production plans. They'll need to closely monitor market dynamics and adjust their pricing strategies accordingly. And according to analysts, manufacturers of family cars are expected to face the greatest impact from price cuts, while luxury car makers are likely to hold up relatively better in the market. The reason behind this discrepancy lies in the target market and consumer preferences. Family cars, typically priced in the more affordable range, may experience stronger price pressures as automakers compete to attract price-conscious buyers. On the other hand, luxury car manufacturers often cater to a more niche market with a higher willingness to pay, allowing them to maintain relatively stable pricing amidst market fluctuations. The combination of soaring energy costs and the higher initial prices of EVs may put them out of reach for many potential buyers. Recognizing the need to stimulate demand, Tesla, under the leadership of Elon Musk, took action by slashing the prices of its cars by up to £8,000 in the UK. This strategic move made some of Tesla's more affordable models fall within the price range of the mass market. Brands like Kia and notably other car manufacturers, including Ford Motor Company and Lucid, responded to Tesla's price cuts by lowering their own EV prices, aiming to remain competitive in the market. Furthermore, there is evidence indicating that car prices across various segments have started to soften. Cox Automotive's latest data reveals a 2.4% decline in wholesale used vehicle prices in March compared to the previous year. However, it's worth noting that the prices did experience a slight uptick of 1.5% from the previous month. Similarly, a report from Kelley Blue Book in March highlighted a consistent decline in new vehicle prices for 3 consecutive months, hinting at a sustained trend. What do you think about this? Have you noticed any changes in used car prices in your area? Let us know in the comments below. And remember, stay tuned for more exciting updates. Thanks for watching.